Hello, I'm Jorge Herreria. Today is March 6, 2018, and Easter time is 9:21, so 9 before minutes the market open. I want to share my view on the market. Let's take a look at the S&P 500 over here. Uh, what I'm seeing is some sideways consolidation happening, some weakness on the relative vigor index catching up, and we can see the MACD as well, kind of in the negative territory. My the market has been the S&P 500 has been closing over this week and last week above its 8 moving average. Has been crossing it but not close below it. So that leads me to believe that this market in the long term and mid term it has a strength to go higher, and we will see some internal indicators that are telling me that. However, I expect a pullback given the current weakness that we have on this period of time. And this pullback most likely will be flashy, will be fast, and based on news of something. And my targets for that pullback, it will be something definitely below the 200 moving average. And I sense somewhere to the bottom of this consolidation that we see over here. In terms of percent, let's say something like a drop of 4%. That will be acceptable, or maybe 5%, but no more than that. The 5% will go and hit the 50 moving average that we have today. Okay. Medium term and long term, definitely I see the market going to hit the crossover of the 21 exponential moving average and the 8 exponential moving average. In the Nasdaq 100 composite, also the QQQs, I'm seeing a very similar situation as the S&P 500. The relative figure is getting flat, and the MACD is also getting flat. This one is also holding above its 8 moving average. The 21 is still far, and a drop from it into its 50 moving average will be also around 5% drop, 5.8, almost 6% drop, which will be okay. And yes, and the mid to long term, definitely I see the QQQ hitting this one, the crossover, which is a 4.5% on the way up. The one that has I'm keeping a close eye is on the small caps, because this one has definitely closed below its 8-week moving average, and now is aiming to challenge the 21 moving average. As you can see, the relative vigor on this one has dropped significantly, and the MACD is widening up. In the past, this index is the one that has led the market. So if that continues to be true, this one is telling us that the market is going to drop. If the drop happens, I expect it to stop at the 50-week moving average, which will be a drop of almost 5%. And same as the other indexes on the way up, definitely I expect it to come into the crossover, and this one has a very nice, if it's all the way to here, it has a very nice gain for 9%. Jumping in some indicators, let's take a look. What do I have here? This is the emerging markets versus the S&P. This one has been telling a leading indicator. So what I'm seeing over here, a drop, and lately over the last 2 days, is kind of refusing to go down, the emerging markets. So that is telling me on the long term, yes, the market will go higher. On the short term, this one can easily turn around and continue to go down. This is the Treasury. This is good news. The difference between the 2-year and the 10-year has become wider. Let's see. This is very hard to see, but we have 255 and 270. At the beginning of the year, they were too close, which whenever this one goes higher than 10-year, 2 years becomes higher than 2 years indicates recession. Now it has a different, significant spread, which is good. That means the recession fear has been moved away. Over here, I have the Nasdaq, new highs, new lows. We're still in positive territory. Some degradation over here. If this one starts hitting the negatives, well, actually, it will be kind of a laggard indicator. But yeah, if you start hitting the negatives, you will see the Nasdaq composite, the Nasdaq, I'm sorry. Yeah, Nasdaq composite hitting high, hitting new lows. However, I'm not seeing on the new highs. I'm not seeing big numbers as we saw it on 2018 when this rally happened. So that's something to keep an eye. There's no much strength. Next one. Oh, this is one that I just discovered recently. We have over here 5 years of cumulative new highs and new lows. Those are the lines over here. And I'm going to use the zoom. This is a confirmation lagging indicator. And what I'm finding out is, for instance, over here, do you see there's starts being a space, white space between the green line and the red line, which is the 8 exponential moving average and the 21. Once you start seeing the green light, you can get it is an indication that in the long term the rally is sustainable. So as we can see, this rally happened over here, and then we have a drop. And that drop, we still have some space over here. Was a kind of a flashy one, and in the long term, the rally is sustainable as long as we have white space between the red and the green light. Recently, this space is starting to form, so that leads me, this is a long-term indicator. Is okay, yeah, long-term looks like the market can continue to go higher, and definitely on the way down is the same. If we see the lines going down and we see white space, it's like, okay, the downtrend is sustainable, meaning it's going to go down. This is the advanced decline on the NYSE, and what I look over here is for divergences. For example, over here, the advanced decline did a new high, and the S&P 500 did a new high. And then if we move forward, this one get to the new high, and the S&P 500 didn't. So that divergence was a positive divergence, saying the market has a strength to go higher because we have new highs in the advanced decline. What I'm seeing over here, it is that we have a high over here, we have a lower high over here, and over here, yeah, well, where's the high? Right here. There you go. Right here, we have a lower high when the market did a higher high, and that led to the pull down. Now, in the way longer term, we haven't had a higher high here. However, we have a higher high over here. So that puts the thesis that in the long term, yeah, the market likes to go higher. Now, more short-term speaking, here is the CBO options trade, the put-call ratio. The pullback to happen, we need to see this this ratio to come down to 80s. And actually, when it comes down to 80s, that will be the bottom of, no, actually, it will be the top. This is a contrarian indicator. Once we hit 80, is that we are on a top. Like we see it over here, we are in a top and then pulls back. So right now, the pullback that I'm expecting, based on this indicator, is still ways to go. It needs to rally higher. So there's more puts in place, and those puts are the ones that makes the market to go lower. Okay. So overall, again, I'm expecting a pullback, but not that optimistic of the pullback. Maybe we'll have only one that hits the 21 and continues to consolidate. At this time, I'm kind of giving it 45% chances for the pullback to come down and test the 50-week moving average in the short term. Okay, it's something that wanted to share. I just finished listening this audiobook of Mike Lewis, Flash Boys. It's an excellent book if you love to understand history on what happens. And he focuses a lot on the high frequency trading and the dark pools. It is a it is a book that I recommend. Alrighty, hopefully this helps on your trading. Talk to you soon.